Hello guys, Mark Balash here. Are we on the edge of yet another banking collapse? Just in the last couple of weeks, we have seen the unprecedented collapse of multiple large banks. Silicon Valley Bank, First Republic Bank, and many other foreigner banks like Credit Suisse are insolvent, and billions in customer deposits and investor dollars are at risk. Worse yet, this could just be the beginning of what's to come. So how are you going to protect yourself, your capital, and ultimately your future in such an unpredictable time period? Let's take a deeper dive into what's going on, and I will share with you two investments I think are worth looking into at this time. The last banking failure in 2008 nearly collapsed the entire global financial market as we know it. As a result of banks being bailed out by US government, the banks continue to overextend themselves, have loaned too much money, made some bad decisions, and continue to make risky investments with your money. Fast forward to the present time, banks have slowed lending to a near halt. They're not lending money to small businesses, which is a problem, simply because they don't know what's going to happen. So most of the banks are sitting on the sidelines right now, trying to figure out what's going to be their next step. Banks are in business to loan money, so how are they going to be making money when they stop lending? And more importantly, how did this happen? Bank operates on what's called fractional reserve banking. And what that means is that the banks are required to keep at least 10% of their deposits for withdrawals, or they used to. So what happened during the pandemic back in March of 2020, the Federal Reserve reduced reserve requirements to zero. What does that mean for you and me? Well, that means that if you deposit $100 into a bank today, the bank can legally risk all $100 of your money. This means that the banks are legally allowed to risk all of your money. Someone may argue, but the banks are insured, right? Well, kind of. Worst comes to worst, God forbid, if the bank fails, you can only recover up to $250,000. That is guaranteed by FDIC. Meaning, if you have $400,000 in the bank today and the bank fails, you will lose $150,000. And don't think that you're gonna get your $250,000 back the next day. You will most likely receive it in some form of installment. I want you to think about this. All the banks in the US are regulated and they all have to follow the same rules. Now, if 2 out of nearly 5,000 banks in the US fail, what does that mean for the rest of the bank? How safe do you think the rest of the banks are? Wait a minute. Are you thinking what I'm thinking? Well, you might be right. There are many other banks that have financial problems, and I think they will start coming out in the spotlight sooner or later in the mainstream media, because a lot of people on finance YouTube and internet finance publications have been talking about it for quite some time now. There are many investments out there that are recession-proof, some of which will even outperform in times like these. Remember, most millionaires and billionaires created their wealth during recessions, which is why we're stressing the importance of timing. Let's share two investments we know work not only during a recession, but in any market condition. My first investment suggestion is affordable housing. Think about it. No matter what the economic cycle we are currently in is, people always need a place to live. And no, I'm not referring to traditional commercial apartment buildings or multi-family residential homes. What I'm referring to is the building that is not fully regulated by the state, but either on a federal level or state level when it comes to eviction process, which may preferably be located in an opportunity zone. This is the type of investment that will outperform many other investments out there during a recession. If the stock market crashed by 25% tomorrow, these people still need a place to live. And remember, you are providing affordable housing to good quality people with verified income. My second investment suggestion I'm going to make today is mortgage notes. What's really cool about this type of investment is that you can dictate the interest yield you will be earning on your investment. It is also considered to be a lower risk investment. It can generate decent double-digit return, and the best part is you may not even need to have the money to do this. There are many creative ways how you can be purchasing these notes with no money down. But remember, you cannot just go on YouTube and expect to learn how to purchase these notes and make 10 or 20% return on your investment in 2 weeks. But I promise you this, you can be successful doing this. We shared 2 investment ideas with you today, investments that generally do very well during a recession. If you want to learn more about these 2 investments mentioned in this video, please subscribe our channel and be notified when those videos will be released in the near future. We hope this video was informative enough for you to take the information and make something out of it. I believe there may be a small percentage of people in my audience that will become successful doing it, especially because we'll never mention an investment that is not proven or has no potential. Thank you again, and we'll see you on my next video.